Morning, Paul Georgie from Allendale. It's December 11th, Tuesday morning, and we just got the USDA monthly supply demand report. Pretty much a yawner. The USDA did not change the corn ending stocks at all, kept them at 647, and just quickly looked over the balance sheet, and looks like they kept everything the same as they had estimated last month, saving all the excitement for the January report. The wheat, however, did increase ending stocks there, went from 0.704 up to 754, about a 50 million ton increase. And the soybeans, they decreased the ending stocks there from 140 down to 130, in line with what the trade was expecting. After this report, we've seen a reaction positively to the market. The corn jumped from a 4 to 5 lower to a 1 or 2 higher price, and the soybeans went from 1 to 2 higher up to 11 higher on the day, and then quickly settled back again now that the report is out of the way. The USDA did not change the world stocks all that much. They did lower the corn production out of Argentina, went from 28 last month down to 27.5, and the other numbers were very close to unchanged. World ending stocks increased in wheat, stayed the same in corn, and roughly the same in soybeans. So not much adjustment across the board. So now that this report's out of the way, what's the trade going to focus on? And I think the focus has shifted from supply side type economics to the demand side of the equation, and we're seeing U.S. crops struggle with demand. The corn price, for instance, we did some analysis yesterday. U.S. price of corn at the Gulf is about 89 to $1.04 a bushel higher than corn out of South America. We've got the wheat market that is struggling as well. We've had the Iraq bought Australian and Romanian wheat instead of any U.S. wheat. We had Taiwan pass yesterday on a tender for corn. They did not include the U.S. in that tender at all. So definitely a concern by traders. Now, as we look at the futures market, we've got the market moving down to levels where a couple weeks ago we seen an increase in demand from that 715 area in the March contract, the 710 area in the December. So we're getting close to that area, looking for some potential export business there, but the price relationships yet between the U.S. and South America are definitely advantage to South America. We've got NOPA crush numbers coming out on Friday, so that'll be watched closely. Gulf basis is still very strong for soybeans. There is shipments needed to be met out of the Gulf, going to China. Looking for more export business coming out of China is what's keeping strength in soybeans. We have seen domestic basis wane a little bit here, become choppy as some grain is starting to move as producers haul contracted grain that's due after the first of the year, starting to move that grain to the elevator, and that's giving some reason for some weakness as well. The Mississippi River situation is still a concern. It's still open right now. The water levels are high enough to move barges down the river. However, the Army Corps of Engineers are now suggesting that instead of the 20th of December, they've pushed that back to possibly the end of December, that the river could be closed if water levels continue to reduce. So those are facts that we got to look at here today, and the other major force in this market is the Washington situation, the talk over the fiscal cliff. That is just it looks like more of a dance than anything else at this point in time. Nobody's really willing to get down to the bare bones and get the numbers put together. So we've got that facing us here through the end of the year. In the livestock trade, we got packer margins still deep in the red. They're not willing to pay up for cattle. We're just not seeing any strength in product. We did see a little bit of strength yesterday, basically a rebound from Friday's market. We're up 110 in choice, up 54 in select. The problem we've got in beef is we're going into a time period here now through the end of the year where competition for other meats, ham, for instance, turkeys for the holidays will take precedence. Beef gets somewhat of a special for rib roast and so forth, but overall meat demand and beef demand will struggle. So that's what's facing packers, and also cattle supplies continue to increase. Show list should be bigger again this week, as we did not clean up the show list last week. Pork is $1 lower today in the cash market. Futures mixed here this morning. Pork cutouts were down 59 cents yesterday. Same kind of situation there. Supplies are starting to build as we go into the end of the year, and could give us some setback here over the next couple of weeks. So stay in touch with Allendale, and we'll keep you informed the best we can. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.